All right, we're going to talk about a Model 1 distribution. So similar to the accumulation Model 1, except upside down, we're looking for this 3-drive motion where we have 3 higher highs in a row. Generally with a Model 1, again, as with the accumulation Model 1, you're looking for a lack of structural change between here and here, for starters, / not being able to really get a whole lot of follow through on this second tap. That volume usually dies off on the second tap, right? Like it's not going to be keep increasing as you're approaching this area here. Rather, it kind of dies off a lot, right? And that's a typical sign for a Model 1. Also, when you see a strong reaction off demand here, if there is demand remaining down here, that's another key criteria. Like, hey, wait a minute now. This may not actually be a Model 2. It could be a Model 1. So there's a lot of reasons, right? And another reason that we're looking at is, has the second tap taken all the liquidity, or has it really hit that level of supply? And you really got to ask yourself that with these Model 1s. Like, was the order flow objective truly hit, or was it not hit? Is there still something remaining that really could justify one more push up, right? And that's usually the key question that you have to ask yourself with these models, right? That, along with market structure, will help you guide yourself in the direction that you need to go, right? So in the example that we're looking at here, we're looking at just this massive range here. As you can see, price action is trying to go higher than the range high on the right here. It did close above on the 15, but we don't know if it did on the higher time frames. Let's take a look on the 4-hour. See what's going on here in the 4-hour time frame. So on the 4-hour time frame, no, I mean, it barely closed above. It's mostly just a wick. But ultimately, we're not playing this as a bigger model. We're playing this as a possible distribution following this massive expansion away, right? So when you get these big expansions away, up, it's more common to see a distribution, right? Now, whether it's a 1 or 2, from a model perspective, I can't answer that. So first things first, let's get into this and take a look at what's actually going on here. We're going to go to the 10-minute time frame. I'm going to draw this like a range. So we got a swing high formed, we have a swing low formed, and we have the range being confirmed right then and there. Excellent. That's what we want to see. Now, quite clearly, if it is to distribute here, following that massive expansion, did this even do anything to begin with? Let's find out. Let's draw a horizontal line using the Alt-H button. Okay, or you can just do it the old-fashioned way if you'd like to. I just want to mark it on that range high to see what that hit. Did that do anything? Well, yeah, it actually took some liquidity out, but it didn't really take all of the liquidity out. There's still points here, there's points here, there's more liquidity here, there's more liquidity over here. So there's still reason to go higher, which is, again, a good sign for distribution. We're in the area that makes sense. We're starting to take some kind of stop losses, right? That's great. So let's see how this progresses. So ultimately, as price progressed here, as you can see, we had a deviation of that range high. So now we have a tap 1 and we have ourselves a tap 2. Price also reclaimed the range with the close of the same time frame that we drew the range on. So now we can pull this up, right? So now we have our tap 1, we have our tap 2, great. Now we're going to pull this horizontal line up as well to see what it hit. What's remaining now is the question. I'm going to make this a little bit thicker so we can see it better. All right, let's go over to the left here once again. All right, so it came very close to taking out this liquidity point, but it couldn't quite take it out. And again, there's still some more here, which makes me believe this very well could end up being a Model 1 because of that situation where there's stop losses remaining, there's stop losses remaining. It didn't quite hit, in my opinion, the order flow objective. Now, I'm still open to the idea of a Model 2, but I need to see some kind of justification for that. What I mean by justification is I need to see some kind of structural change to begin with, first of all. I need to see volume increasing on the second tap's bearish expansion. So I want to see volume going up, 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 as price is going down, 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 down for that break of structure. Ideally, because it did not take out those substantial liquidity points, I really want to see it close below this point if we could. That'd be much cleaner, and I'd feel pretty good about it being a Model 2. But again, this video is about 1, so I'm kind of hoping it's going to end up being a 1. So let's see how this progresses. Let's turn the volume tool on. So far, and we're just going to mark that, and we're going to mark the same stick here for that last spike up, okay? So far, it's kind of decreasing the volume, which isn't really the best sign for a Model 2. So the way that it's coming down here, it's looking like it's trying to slant down, right? So return to zone, return to zone, return to zone. I cannot stress this enough. It's so important, right? The way that price action, it's telling us that it could easily sweep back up, take that high, possibly take out those liquidity points to the left here, and then go down. Because really, once you start breaking this point here, What's there to stop price from filling this void, also known as a fair value gap, and then taking all these liquidity points here? So this is what I call like a real distribution. Like this thing could really go down. It has the potential to really move here, right? And it's also not really giving us the vibe based on volume alone, as I mentioned, to justify this as a 2 so far. Plus, there is no structure between this low and this high. It's basically straight vertical with one black candle in between. And the way the black candle is situated, and you can see how the bullish candle trades a little bit lower, that's not going to be a significant higher low for me. So there really isn't much for structure unless you were to go to a very low time frame, which we can't do because we're so far back in time, right? We're all the way back in September of 2022. So in this case here, as you can see, it's clearly pointing down. Let's see how this progresses. I would automatically start preparing for something like this. Now, I can't guess where that stop loss is going to go accurately, but I can take a guess, like an educated guess, right? So what we can do is we can go over to those previous points once again and try to cover them a little bit, right? I don't know if it's going to go that high, but there's a point that goes up to here. So I'm going to cover at least that guy, and I'm going to give it a little bit of room. So let's go with a $75 stop on our estimation. But of course, we're going to wait for price to come back within the range before we get involved anyways, or at least we should be. And ideally, if possible, if there is a way to do this, sometimes there's not, watch the pull up, right? Watch the way it pulls up and then bang, you're looking for this, right? And if you can market on that, that's much cleaner and much better than, just marketing on the first reclaim of the range, because it doesn't necessarily mean it's going to work. So we'll take a shot here and we'll see how this progresses. Hopefully it gives us some kind of structure because I can't go any lower than 10 minutes on my time frame. So as you can see, we're starting to purge up here. Structure is developing. It's not terrible. I can't deny it's not terrible, but hopefully it doesn't just spike up in one shot here. Oh, it has. So in this case here, unfortunately, this is going to have to be the sell. There really isn't much more that I can look at from a structural standpoint unless we wait for this low to break, which would be a higher low, say on the 3-minute chart. I can tell you that. So higher high, higher low, higher high. If we get a bearish break in structure, then we can watch for a lower high, for a lower low, or market it on the break. I'm only partially getting into the trade for now. I'm waiting to see what happens here. Now, that is all the way in the discount of the range. So that's up to you if you think that it's worth shorting down to here, or is it just worth keeping what you already have in the trade? That'll ruin the entry big time. So if we go back a candle, this should have been a decent retest entry. Why is this a good retest entry? Well, because if this is your break of structure line, this is your new supply range, okay? So you could have entered on that new supply range that formed after the break of structure right here. That's a lot cleaner of an entry, the more preferred approach, if you will. Price comes back up a little bit higher. You would have been underwater for a moment there. That's fine. And ultimately, ooh, look at that. Look at that aggression, right? You got a very, very nice aggressive move to follow. So this is a perfect example of a classic 3-tab Model 1 distribution schematic. Very, very commonly, you'll see this exact situation. As I mentioned in previous videos regarding the Model 1 distribution or Model 1 accumulation, they generally happen when there's a lack of liquidity points being taken, right? Or the overall objective was not hit following the second tap. On that second tap, did it hit something or did it not hit what it needed to hit is the real question. If it didn't, well, you're opening the possibility of it being a Model 1. Even if structure does change on a micro scale. Like even if there was a structural break here from left to right, doesn't mean it has to be a Model 2 if the overall objective wasn't hit over here to the left. Okay, so in this case here, as I mentioned, this wasn't really a great higher high, higher low anyhow. Despite not being able to check it on a lower time frame, it still wouldn't be sufficient. So let's say that we drive this down and see if we hit the bottom here. Now, obviously, at this point, you should be well into profit and you should be taking profits big time. We came very close, and you might think that's if it starts to curl a little bit here, I might just close the trade. So it's trying to come up a little bit. So this is where I'm going to close. I'm going to take my win because you never know if it could come right back up again and fill this void, right? So that's a very, very nice trade. And let's see what the end result was. It might actually go lower here. So it actually did hit the target. So it hit the target, but we took the safer bet, which is perfectly fine. There's nobody that, it's our money. Like no one else can tell us what to do with our money, right? So is it okay for us to go and take profits early? Absolutely. 100% of the time we can do that. There's nobody in our ear telling us otherwise. Let's look at a bigger Model 1. It's right in front of you. Can you spot it? Well, I hope you guys could spot that. It's a fairly easy one. So essentially, what we have here is a very extended Model 1 distribution. I'm actually going to go on a higher time frame so you guys can see it better. But as you can see, on the push up June 21st of 2023, we made a higher high. Price came down, made a higher low. Now watch. If we pull our range high down to our range low, it took the high, but it actually closed above the high. However, it was a quick buy to sell. So in my opinion, it's still worth noting this as a second tap. So tap 1, tap 2. I'm going to pull this guy up. Take him over. And then you also had tap 1 and tap 2 here. Interesting, right? So let's pull it down. Okay, now we'll see what happens. Turn the volume on. Volume is on. So notice on tap 2, volume kind of died off a bit. Not a whole lot, but it starts to die off. But ultimately, the key signature here as to why, in my opinion, it's a 1 and not going to be a 2 is this, right? Clearly, you had an aggressive reaction off demand. It almost seems like price wasn't ready to quite break down aggressively. And not to mention, you didn't break any structure. Where's your primary range low to range high structure? Well, it was low to higher low, to higher high. Did you ever come back past this point and break it with the close? I don't think so. No, we did not. In fact, the job of this high failed to do its job. Why did it fail to do its job based on structure? Well, it failed to do its job because it couldn't take out this low with the close, the low that created it from an internal standpoint. Because it was unable to do so, it became weak in nature. Price came back, and it literally just came right back towards that high, right? We're coming back towards the high as we speak. So in that case, there was no justification for a 2 at all here anyhow, right? I'm sure many people tried to short this as a Model 2, maybe, but, there really wasn't a reason to short it from a Model 2 perspective. Now let's see what happens here from a Model 1 perspective. There you go. Smack, right? There's your third tap. So this is where obviously the objective is going to be this low, but because we have a tap 1 and a tap 2 on the underneath section of this range, it makes you wonder, is this going to turn into one of those accumulation models or reaccumulation models after the fact? It very well could. It very well could. Let's cancel the replay. So in this case here, despite taking that low one final time, as you can see, that equilibrium just did not want to break. So being able to explain this is a little tricky, but I'm going to try. So we have the 1, 2, 3 tap, but ultimately it produced yet another tap on the high. So 4 taps. Okay. Now you could argue that this was its own model right here and the objective was almost hit. And then this was its own model, which is fine. That's perfectly fine. In fact, that's the proper way to look at it. So there was 2 different Model 1s that existed. After the Model 1 distributions, you had the 1, you had the 2, and then you had 3 here. However, following this third tap, structure from the high down, which had to break, just couldn't break. Your structure was down, up, down. It couldn't break this high. It SFP'd all these points over here to the left, and this became a weak targeted low. Price ultimately retraced back because of that very reason, right? It wasn't able to do anything. It had no legs to it. In fact, even volume was, you had a couple of good spikes here, but look what happened after the low. This is the low. Here's the volume spike. Look what happened. It just died off, right? That's not great. That's not a great sign. Dying off volume during the last tap, it shouldn't be the case. It should start to spike. So ultimately, it wasn't a great model in the first place. Now, I won't deny that even this distribution looks kind of poor. Really, it doesn't look that great. It's too spread out, right? Like you got too many wicks all over the place. It almost looks choppy, right? You could have played every deviation on both sides and made money though. But that's the case with most models, right? Generally, you can play a lot of the sides on these bigger time frame models, which is fine. Sometimes you'll get these steeper Model 1s as well. So we're going to go down a little bit lower here. Let's go to this area. Looks like there was a model here. In fact, it looks like there was a couple different models. Let's see. So on the 15-minute time frame, let's go to the 30. So in the 30-minute time frame, there was, you could argue a 4 tap. Really, you could. You can call this to this to this as a 3 tap, or this to this to this as its own 3 tap. Personally, again, this is where you'd have to go out and look to the left to see where the liquidity points are, where demand actually is. Now, ultimately, I would have to argue that, this is the cleaner one between this low and this high. Ultimately, we know when there's 4 taps anyways, you generally go lower later. So we have tap 1, we had a tap 2. Price couldn't break any structure. It respected supply right here. this being the supply. Because supply was respected, you can clearly tell that a Model 2 made no sense. And then it came back one more time, taking out that low, ultimately targeting the range high. Did it hit your range high? Yeah, it did. Very nice. And then what happened to follow? Well, you had the same situation again. You had another Model 1 distribution. Range high, range low. Tap 1, tap 2, tap 3. You would have pulled this up following tap 2, and then it took the high one more time because the follow-through of tap 2 was non-existent. It retraced a tiny little bit, not even to the 50% line. Didn't break any structure because there was no structure to break. Then it smacked right up one more time. You could have entered on the first reclaim back within the range, putting your stop above that high, targeting the range low, and then targeting all this liquidity underneath, right? So it went from this accumulation Model 1 to a distribution Model 1 right directly after. Isn't that interesting? And then, you had another accumulation Model 1, right? Which you can just flip the chart upside down if you want to see it as a distribution, or vice versa if looking at a distribution wanting to look at an accumulation. It's all the same. Really, it's the same thing. It's just upside down. And sometimes you'll receive these models where there's far more, or what appears to be so many wicks on the high that it almost looks a little confusing to look at. But remember, you're focusing on where is that original range high, where's that original range low, and you're going from there. Make it easy on yourself. In this case, we had what we refer to as a failed distribution Model 1. Swing high formed, swing low formed. You confirm the range right here. We had a swing high, we had a swing low, and we confirmed the range, right? So we had equal highs or semi-equal highs. And then we have price curling up. So it gave you a reason to come back down again. You had a good return to zone here. But maybe, the overall order flow objective using higher time frame structure didn't really make sense to top out here, right? Maybe we didn't even come near a supply zone. Maybe this price action looks like it's distributing in the middle of a fair value gap from previous price action over here on the left. Who knows? We'd have to go check, right? But for this example, we don't need to check. We're just looking at this played out model. So what actually happened here? Why did this fail? Well, it failed because of lack of follow through following the third tap. So if this is your tap 1, this is your tap 2, and then you would have moved your range high up, and this is your tap 3, then you had a very nice bit of follow through at first, but it was not sustained. Look at volume. Like it just dropped off a cliff here, right? So on the next move up, it just dropped off a cliff, especially on this down thrust. It just couldn't break any lower. So is that a good sign for a Model 1? No. It should quickly exit that range, right? You don't want it hovering in that range for eternity if you think it's a 1. In fact, statistically, Model 1 distributions and accumulation should be more aggressive following that third tap than a Model 2. You want it leaving fairly quickly. So the fact that it started to fart around in here, producing this little Model 2 accumulation, it wasn't really a great sign. And obviously, as it started to come up again and break that structure, that was an even worse sign. It just invalidated the whole model. So if you ever see, you think you got yourself a Model 1 distribution, you got your 3 taps marked out, clear as day, you're in that short trade. And then all of a sudden, price comes near that range low into the extreme discount or discount. And then it starts to make its way up, and then it actually flips to bullish structure again. You better watch out, because it definitely should not flip to bullish structure again in a distribution schematic. If you get that, you should exit that trade, hopefully in profit while you still can, or at least de-risk that trade in a way that you're not going to lose any money, right? Use your head. That's all I can say. Use your head. So these distribution models, as I mentioned, you'll see them all the time, especially on these lower time frames, right? But it's up to you. Do you want to trade these lower time frame models? Are you only looking for that bias to help you get that competitive edge? If so, then obviously Wyckoff's for you. But if you're going to be trading all these little micro models, you're going to have a hell of a time. You're better to practice first. The best advice I can give anybody is to practice these things first. Here's another Model 1, right? You had a swing high and a swing low. There's your tap 1. Here was tap 2, and here was tap 3. Down you went. But overall, it wasn't able to break this demand zone. So did it go higher? Yeah. Right? Demand was respected. Of course it's going to go higher. So that model quickly invalidated itself. And plus, it was only a tiny model when the range was much bigger, right? There was a much bigger range at play there. So in fact, you could also argue that this was the original range. You could have pulled it up to here, and then pulled it up to here, and then pulled it up to here. And then you would have had 1, 2, 3, and 4 taps. And whenever you have 4 taps, you're very likely to come back for that 4th tap later on. It's usually short-lived, okay? Here's another example of a model 1 distribution. You had a 1, swing high formed, swing low formed. Tap 1, tap 2, tap 3. The overall objective of the distribution was to come down and try to mitigate this demand range. Did it do that? No, it just missed the top of the demand range. But overall, the structure flipped back to bullish again right here, and that was the end of the distribution right then and there, right? So it would have been a short-lived distribution. That's perfectly normal. You will get that, okay? Remember, especially if they're on lower time frames in the middle of nowheres without a really great confluence or being in a high confluence zone, then they're not going to last for eternity, right? Let's go to the higher time frame. Let's see if we can find ourselves a distribution model 1 on a higher time frame. Well, let's look at the previous all-time high on Bitcoin, right? So on the previous all-time high on Bitcoin, we had ourselves a swing high and a swing low form. We had the confirmation of the range. Now price is actually approaching that swing high. Let's see what happens. So it took out that swing high. Let's see if we get a structural shift on the 12-hour. So high, higher low, higher high. So you'd have to break this low down here. Let's see if we get that. Oh, it's already starting to, volume starting to decrease from that second tap. So tap 1, tap 2. Now let's pull the range high up because it came back within our range. All right, so we're going to mark these out. Tap 1, tap 2. So ultimately, we're looking for possibly another sweep if we don't come down and break some kind of structure here. Now we're coming into an area of demand. So if this demand holds itself and it actually breaks this downward structure, then, that's probably the sign that we're coming up for that third tap on the high. So if we go like that, we're probably coming up for that third tap. Well, we just broke that structure. So now we can already start to prepare for a possible third tap, right? We don't know where the wick's going to land, of course. We don't know that yet. We're waiting to find out. Wait for price to come back within the range because it could very well just keep going. We don't know that. Okay, so now it's starting to close back within. We can enter a stop loss here. We can wait for at least a sign of demand failure and some kind of internal shift in structure. And then look for involvement. The entry could have been right in there somewhere on a lower time frame. Right? You're seeing the evidence that demand failed to put in a higher high. You could have entered on this flip zone right here. That was a flip zone right there. Right? The supply is the supply that caused demand to fail, obviously. And from there, you could have drove it down. And that would have been incorporating another tactic in my strategy section called supply to demand flips and demand to supply flips. This would have been a D2S, okay? A D2S flip at the range high during the third tap of this Model 1 distribution schematic. Now let's see what the follow through looks like. All right. So this is an interesting one. Why is it interesting? Well, because structure actually did flip back to bullish. Watch. So lower low, lower high, lower low, and then all of a sudden you're seeing higher highs. Okay, so that was actually technically invalidated the second that you had this bullish break. You didn't get to the entire target of the range low. Interesting. So what happened after that? Well, let's see. Let's close out that bigger range because it's no longer valid. We're going to close all this out. And we're going to go down maybe to the 6 hour and take a look. 8 hour perhaps, look a little cleaner. So if you look a little closer here, you can see that there was another distribution. Watch. Swing high, swing low. Tap 1, tap 2, came back in the range, couldn't break structure. Okay, needed to break this low right here. Did it break this low on the second tap? No, it did not. So price came up one more time, sweeping the high once again for that third tap. So 1, 2, 3, bang. There you go. So the distribution basically came back to life, right? So that distribution came back to life last minute there and then just pummeled down and took out that original range low and went a lot lower actually. So you could have had another chance at getting into a trade right there. But again, very, very crucial step was being able to identify that there was a bullish break because that doesn't always happen. A lot of the time when you get a bullish break like this following your third tap of the bigger distribution, this being the 3 over here, right? This is the 3. Then a lot of the time it just continues up like that and goes on its merry way. Okay? So be careful with that. This example, obviously, that didn't happen. But I want to be able to show you guys what can happen, right? Sometimes you get this odd situation where another distribution develops itself.